So recording is started, and tell me when my screen is visible to you.
Okay, yes.
Okay, it is visible now.
Yeah, we see your screen.
Okay, so what does this tool uh, do, and what is the difference between this tool and the previous tool? So I have been working on something which is you can say which was never been created yet, and which was never available for the people of the TradingView who use the TradingView. So I have created a two-in-one tool. What that tool does, that tool is also provides you a facility to use footprint and also the big trades at the same time in the single tool. So let me show you. If that's the enhanced variant. So this is the option, show full footprints. I will turn this on. Let me turn this on. And what it will do, let me go to the lower time frame, 1 minute. It will show you the tick based data, what's happening at every candle, at the every price level of the candle. Okay, so this candle has the wick till this area and upper wick till this area. This is the candle. Are you guys seeing this candle? This candle, and it has a footprint on the right side of this candle. Half half footprint covers the candle area, and half was on the right side. So what that footprint data shows you. So what are these lines? These purple lines. Are you guys seeing this? Is it visible to you? These areas. What are these lines? Oh, let me.
Yes, yes.
So these are the imbalances at this price level. Happened at so at every price level there are buyers and sellers in the order book. Okay, so there should be an imbalance to create at every price level in order to move the price up and down. If what is the imbalance? Imbalance is like the difference between buyers and sellers. If buy Let me show you. Let's see this imbalance. So at this price level there are 204 buyers. These are not the buyers. These much of the buyers or the buying contracts were traded, and there are 63 selling contracts were traded at this price level. So which party is more dominant or strong? The buyers one or the strong? Buyers was more. So this is the delta. Delta is the difference between buyers and sellers. Like if we add plus minus, if we do the math of this plus minus this, it, do 204 minus 63, it will we will get the value of 141. So this is the delta. Delta is the difference between buyers and sellers at this price level. So as buyers were more at this price level and sellers tried to push the price down, but there were limits, buying limits at this price level. There were buying limits at this price level in the order book. So all the selling were absorbed, and buyers were even this much 52%. It will generate the percentage of the imbalance. Buyers were 52% more than the sellers. Okay, so what happened? We got a good area for the imbalance. So this is the concept of imbalance. How the imbalance forms? Imbalance is basically the difference between buyers and sellers. And if buyers are more, then there should be imbalance on the buying side or the bullish imbalance. And if sellers are more, there should be a selling imbalance. And delta is the difference between buyers and sellers. So let me show you something. So Do you guys now understand what is imbalance? Yes or no? I am not
Yes, yes.
I'm not trying you to tell me everything. I will try to explain each and everything which is displaying at this area. Just I will just ask for the thing that I am going to teach you. So at every price level, what this indicator does, I don't call this tool indicator. I call this a tool because it is not a lagging indicator. It requires, let me show you in the settings. It requires if you want to see the precision, the dot precision in this indicator, you need to fetch the data from the 1 second. You need to use 1 second. Or if your TradingView version provides you the facility, you can extract it from one tick. Okay, so it works on tick based data. Okay, so what it does, it tells us the story what happens at every tick of the market. When market moves one ticks upward or two ticks downward, what happens between them, and who were the dominant. How dominance will be represented? It will be represented in the form of imbalance and delta. Okay, if there is positive delta, it means buyers were more than the sellers. And how much was the positive delta will represent the imbalance between buyers and sellers. Okay, so delta is kind of imbalance, and the percentage of the delta is the percentage of the imbalance. Okay, if it is positive delta, 10% positive delta, it means we have 10% positive, we have 10% imbalance. So if you don't want to see the read every what happened at every price area, you can simply spot the imbalance. How? You can simply spot the imbalance from have you see these lines, these purple lines and green lines? Can you see this?
Yes, yes.
Okay, so uh, to make it easier for you guys, I coded this thing this way that you can also spot the imbalance by the color. You can see this color. More prominent color means more buying, strong buying area, more imbalance. So you can see the imbalance of buyers over here. More prominent in sell color, the selling imbalance at this area. So the in footprint, if you have traded the footprint in your life, or if you know how to trade the footprint, you knew that the only thing that matters in footprint is the imbalance. Okay, either you are either you are trying to observe the absorption or the exhaustion in your area. You need to understand it by the imbalance. Or if you want to see the real breakout or the fake breakout, if you want to see the difference between real breakout and fake breakout, you will understand it by imbalance. So imbalance is the only thing that we need to do set in our consideration by in using footprint. So if you want to use the footprint, you can use it like this, and you don't have to zoom in and read what happened at every price level. You just know that these areas where market has done this, you are seeing these bars are the areas of the imbalance. Okay, so market try to mitigate these imbalance areas, and these imbalance areas are the strongest levels of buyers and sellers, okay, which you can't see with the naked eye. And market when try to mitigate this area, how the imbalance forms, if you traded the ICT, you knew when ICT or supply demand and all the strategies, there is the concept is same, that when there are so many buying limits trying to execute at same price level, market makes a fair value gap or the imbalance in the candles, which you see with the naked eye like this. You see the fair value gap at this point, but what happened behind the candle, that there were so many buying contracts were traded that did not let the market to hold this price level and try to fully execute all the those contracts before and market moves up before executing all those buying contracts. So there were some contracts that were left in the areas, in some areas of the candle, which you can't see with the naked eye. You can see them with the imbalance, that these are the imbalance areas where so much buying is buying so much buying is happened, and you can expect a buying move from here, because you anticipate that. You don't anticipate that when you use that footprint or the leading tool like this. You knew there are some contracts that were left at this point, and when market try to mitigate this area, it will give you a good buying move. Okay, so I am not going to I am not showing you a trade or a trade signal. I am just trying to deliver the concept of the imbalance. Okay, so don't take it as a trade signal or anything. So why imbalance is important? You knew the imbalance is formed when there were plenty of more buyers than sellers at any point, and market did not successfully execute all the contracts. Either they are buying or selling, and then market moves up or down, and then market try to come back, which we call it correction or retracement. And when we are when we have marked our areas like this as the imbalance areas, market try to mitigate those and try to execute the remaining contracts that were left on these areas, and give and when those contracts will be executed, market will give us a buying move. Okay, so I have coded two-in-one indicator tool, which you can use as the footprint chart, or you can use as the big trades tool. If you turn this off, the imbalance will be represented in the form of the bubbles. Okay, so it will makes it more easier for you to trade. It's on your preference. Okay, so how you will understand this concept of so tell me one thing, what is imbalance? Is that concept is clear to you? Yes or no?
Yes, yes.
Okay, so
Yes, yes.
okay, so I have coded the big these imbalances that it is forming in the candles at different price levels are the exact areas where the imbalance formed. These the bubbles are not forming like randomly on the place of the candle. If I change it from here, I have reduced these number of rows which you see in the footprint. The minimal number of rows, if I reduce change it to like 20, you can see more detail. You can see more detail. So how we are getting the exact detail of every price level, because this thing is working on tick based. Okay, at every tick, what is happening? It is it is like understanding that, and it is representing it. Okay, so if you are seeing a bubble, or if you are seeing imbalance in the footprint, you have to understand that this is not a fake thing. This is the real tick based execution of the market, that what happened at the market. If you see, we have imbalance at this point. Okay, we knew this by the color, and what market came into this area. If I turn this off, market came into this area and show a buying aggression. And if we are watching with the naked eye, this is live market. If we are watching with the naked eye, we will never like mark the area like where is the imbalance, or where is the what is the concept, retail concept that we trade with the naked eye. This is the maybe the rejection block. We mark the 50%, we mark the rejection block like this, and we mark the 50% of the rejection block maybe, and we try to anticipate the market to go up from there. But that's the assumption that we create, that maybe market will go by, but we don't know that there are some buying contracts left or some imbalance left at this point, which we need to trade. So what is the purpose of using these tools, these order flow tools, is to provide you the third eye in order so you can trade with the smaller stop loss, and you knew the reason that why you are marking an area. If you are seeing this wick, you will mark this area because this is the area where you see an imbalance in the price. Okay, you can even mark it like reduce it to this. Market touch this area to the tick. Market touched this, tapped this area to the tick, and market went up. Why market did not go beyond this, below this? Because there was no cluster below this. This is the imbalance left at the price area to the tick, where market has to mitigate and market has to what we can say, tap the orders which were left, execute those orders, and when those orders were executed, market will go up. So this is the understanding what we can say of imbalance. So if I just show uncheck this option, show full footprint, you will see the big trades tool. So let me turn this on. You will see the big trades tool. You will see the imbalance in the form of bubbles. So what happened at this point? You can see the bubble here. What that bubble is representing? That bubble is representing an imbalance. And if market is trading coming to this point, what happened? Market is going up. Okay. So that's the thing that you need to understand, and that's the edge that our tool provides. Okay. That's the edge that our tool provides. Now, uh, uh, imbalance happened at every price level of the market. Okay. If market has went up, it means at these price areas there were more buyers than sellers. And if market has went down, it means that there were more sellers rather than buyers at this area. So imbalance has to make created in order to move the candle up or down. Okay. So you have to you will not consider all the imbalances. If you trade, why I am giving you examples like this, if you trade ICT, you will not consider all the order blocks. Why you not consider all the order blocks? Because all of the order blocks are not the high probability. Why? There is a assumption that you need an order block which has after that which has fair value gap with it. How fair value gap is created? By the imbalance. Okay. So which has fair value gap with it, which has done breakup structure, which is at the lowest the time. Reason of telling you this, there are some criterias to mark areas. Okay. So there are some criterias to mark the imbalances. Look, price is trying to mitigate those imbalances. This I am going to show you, explain you this this setting. No, this setting. So imbalance happen at every price, at every tick of the market price movement. Okay. So do you understand this, and or do you have any questions? So nobody is replying me. So do you guys understand this, what I am telling? That
Yes, yes.
imbalance has to happen at every
Yes.
price area in order to move the price up or down. There should be imbalance at certain price area to move the price up from that area. There should be an imbalance at a certain price area to move the price down from that area. Okay. So the imbalance has to happen at every time, but which imbalance we will mark, and which imbalance we trade, how we will mark our areas, which imbalance is useful for us. Okay. So as per the common sense, we knew that the strongest areas are the areas where there are if we are trying to figure out a strongest buying area, we will as a, try to look for the area where buyers are more strong than the sellers. And we will try, if we are looking for a resistance area, we will try to see where buyers sellers are more stronger than the uh, buyers. But how much more is enough? Okay. it is based on the volatility of the market. Okay, we will shuffle this setting of the indicator. Sorry, this setting of the tool, the imbalance percentage. Currently, I have set the percentage to 80%. So what does 80% means? 80% means as candle is moving up and down, and it will only mark the bubble, like the bubbles it has marked here. Do you see bubbles here? Do you see these bubbles? The 100% written on the bubble. So it will mark the bubble only where the imbalance between buyers or sellers is minimum 80% or more than 80%. More than 80%, it could be 90%, 85%, 100%. Okay. So 80%, the area where buyers were 80% more than the sellers, it means that area is a strong buying area. That imbalance is a strong buyer's imbalance. Yes? Is it clear? I need to open the chat again and again. You can simply turn your mic on and speak. So,
Oh, now we here. Are we listening? I'm just paying attention.
okay. So
Yeah, I'm
I
just
was,
paying attention. I don't want to interfere with you talking.
okay. So we only try to mark the areas where imbalance is more than 80%. Okay. It means that sometimes there are days in the market. Let me show you. Uh, how I will show you that. What the fuck? I'm not good with drawing. So you have seen, so you have came across to the days in the market, like when there are some days in the market when the 5 minute candle of gold will be after 20 pips. Okay. And you also came across to the days when the 5 minute candle of the gold will be of 54 pips or the 100 pips. Okay. So it depends upon the volatility. Okay. But the imbalance would remain same. How imbalance would remain same? So if there is a price level where there are 0 sellers and 10 buyers, what would be the imbalance? Imbalance would be 100%. How it would be 100%? Because the delta, the difference between buyers and sellers is what we can say 10, because sellers are 0, buyers are 10. So it is 100%, buyers are 100% more than the sellers. So imbalances will be 100%. And there are this example is for the low volatility days, and there are days the days will come when there are 0 sellers and the 100 buyers or 400 buyers at some point. So the imbalance will remain 100%. For why? Because there are 0 sellers and 100 buyers. Buyers are more than the sellers. How much more? 100% more, because there are 0 sellers. So the imbalance will remain same in low volatility days and high volatility days. Okay. So, and I told you how we calculate the imbalance. I don't calculate the imbalance. That's the criteria to calculate the imbalance. And you can also, I was thinking to reduce the noise in this indicator. What is the noise? I don't want to reduce it. These yellow dotted line is the point of control. What is the point of control?
Oh,
What is the point of control? If you know the auction market theory, uh,
so you said those
is
yellow line is point of control?
yes. All of the like auction or data traded in that area, I have that it has generated its point of control and the value area low and value area high. So this is the point of control where most of the value volume traded. Okay. and this is value area high, and this is value area low. Okay, and that goes same for these candles. Let me show you the point of control. Every candle, so you may see these tiny arrows, white arrows.
Yeah.
This is value area low. This is point of control, the yellow line, and the upper arrow will be the value area high. It
Hi.
should,
Okay.
it should be here. So this is the value area high. This is point of. So what market has done? Market tapped to the point of control. Market taps to the point of control, and if we go to the footprint, we may see the imbalance here, and market went up. Okay, again market came to the point of control, the yellow line, the point of control, and went up. So this is this tool is based on tick based auction, or the buying or selling happened, and it gives you the very detailed information, very precise information based on that. And I will not go to the concept of absorption, exhaustion today. Why? Because you need to understand what this tool shows, what this tool brings to the table. We will do daily live calls from tomorrow, a short session. Well, I will teach you because the concept of absorption will be totally different in this tool. Okay, absorption and exhaustion. This is the main tool, and look what is happening at this point.
Buyers are
Buyers
getting.
showed their aggression. There was 100% buying imbalance at the low of this sell candle, and this is not good for selling momentum. Why this is not good? Because if we have to move down, we need a selling imbalance inside the candle, or above the candle, like this. We have above at the start of the candle selling imbalance, and inside of the candle, and then market tap the point of control of previous candle and mitigate the previous imbalance, this imbalance, and went down. But what's happened in this candle? We got a buying imbalance, but that doesn't mean that we are going to trade here. There are different criteria to trade, and it is very, very high probability and very precise. And you will understand uh, all those things in the future meetings. So the main agenda of this meeting is to show you what this tool brings to the table. And this tool, you will not find this kind of tool in the trading view yet, and even the trading view footprint is not the accurate, and the footprint that our tool provides is the most accurate footprint on the trading view. And this imbalance and the volume bubbles, and the what I will say, we call it the big trades, it is the most accurate, and the most you can say the accurate is the good word to for that you will see in the trading view, and nobody has created this kind of tool yet. And as you see, we are getting a buying selling imbalance and aggression in the sell candle, and this is a good imbalance. I will teach you guys how to trade these imbalances, how to mark these areas. I have learned all these things, most of the things to trade the volume, the trade the footprint and these areas from the deep chart. So I will convey those things to you. And I took some trades today. These are the trades that I took today. All these are trades, and I have sent these trades to the group also. But I will not. And one more thing, why this tool is like showing the data till here? Why not before this? So as this tool fetch the tick based data, so one seconds based data, and it tries to fetch understand what happened at every tick. So it requires the look back period of your trading view, and that's the look back period that our trading view provides. But you will not need the data before this, because you will only use the tool on your point of interest areas to either you trade ICT, either you trade SMC, either you trade supply and demand, either you trade auction market theory. You will mark the point of interest, and you try to understand the concept of absorption, exhaustion, or if you trade the breakout, supply support and resistance, you will try to see the breakout with imbalance. I will teach you how you will understand that, how will you will spot the real breakouts, and how you will avoid the fake breakouts. Okay, so that's it for the day, and that's what this tool brings to the table. And it is like that's what I was telling you guys, that the previous tool, the base variant, was the conceptual variant, and that was not even 10% close to this tool, because this tool provides the actual data, the real data that happening behind the candle. All these tools are all this data is derived from by the information that is happening between the candle and represented in the form of bubbles or in the form of footprint. So it's up to you. If you want to trade footprint, you can simply change it and you change it from the settings. Simply you will turn on the show footprint setting, and you will trade the footprint. And if you want to trade the volume bubbles, you can trade the volume bubbles.
That's nice.
And you will never see this tool in the trading view, or this kind of accurate tool in other order flow platforms. Okay, so we will give a tough competition to all the order flow platforms and out there, and there is no trading view tool out there, because I was taking time and working on this, because I was trying to build something which was never existed in the history of the trading view yet. And I have to, if I am charging for something to the people, I want to provide them the quality rather than taking money and scamming them. So for me, it is always very important to have good reputation rather than good money. So if I want to scam you guys or take money from you guys, I would have maybe sold that tool to you guys. But I am taking time. I was trying to configure something. I knew that I will build this tool and complete this tool by time. So that's why I have not launched that tool yet. But I have to see the reaction of you guys, how you will like that. And if you guys like that tool, you guys are gonna love this tool, because this tool provides you the actual information that happens behind the candle. Okay, so that's it. This will enhance your trading approach and your trading style. So, do you guys have any questions?
Um, um, no, not really. I kind of like get what you're trying to say. I get the understanding of it.
Yes,
So,
that's what the main agenda of the meeting is, to get an understanding of the information that this tool displays, and how we will utilize that information. And in the next meetings, I will teach you guys how you to utilize these informations on the different point of interest for the different strategies. Okay. So how to spot
okay,
the absorption, how to spot the exhaustion, how to spot the absorption, how to spot the real breakouts, how to spot the fake breakouts. Okay. So you will
okay.
get a clear understanding of all these things. Okay. So again, if you guys have any question, you can go ahead and ask. And if you don't have any question, then thank you for your time. And we have 2 minutes left for the meeting, and I will post this meeting on the YouTube. And for the people who did not attend this meeting, and they can rewatch it there. Do you guys find this tool useful?
Yes, I like it. I love it.
Yeah, yeah.
What about Meet Patel? How do you? So we have a
It's a
question.
really based, like institution based, like JP Morgan,
Yeah, yeah.
Goldman Sachs. Yeah.
So I, bro,
But you,
my only concern is to provide the quality. I don't want to
yeah,
scam
yeah.
the people. I always try to convey as much as information to the people. So if it doesn't matter if they want to buy from me or not, I try to guide them right, so they don't have to waste their time and money. Okay. So that's the thing. If you we have created the community, and I always try to see ask you guys that if you guys have any useful information, any useful strategy, anything that is working out there, I try to convey the information that I find useful, that I have. You guys are free to share the information that you find useful, and you guys have about the, if you guys have any strategies about volume profile or about anything, you can share that. I have the strategy about the volume profile that I was trying to share with you guys. I have taken these trades today based on that, and all these trades you will see got into profit. But I will teach you guys this strategy in the next sessions, and it's very useful strategy. It will you guys will like this strategy. Okay, then we have 1 minute left, and again, thank you for your time, and see you again, and take care.
All right, take care.
Take care.
All right, everybody.
Bye bye.